Hello there. While gold is still clinging on to $2,600 per ounce, and while we are waiting for a more decisive move either up or down, let's have a look at fundamental valuation of another few miners. Today we have IAMgold, New Gold and Calibre Mining. Data is based on their Q2 2024 reports. As usual in our model, we look at discounted per share value after all-in sustaining costs, long-term debts and taxes. And in our model, we only look at proven and probable reserve as well as half of measured and indicated resources, without taking into account any of the inferred resources, never mind any of further exploration success. So to the extent that the market price might actually correctly value some of the future potential success, the fundamental valuation presented here might be different. But as you see, we like to lean conservative here by looking at relatively more established reserves in the ground. And of course, the data that we plug into the valuation model includes the prices of gold, silver and copper, the amount of reserves and resources in the ground, the costs of extracting those reserves. We'll look at all-in sustaining costs, we'll look at long-term debts and taxes. Of course, we'll look at per share value with a discount rate of 5%, and we have a bit of a secret sauce on insider shares, as larger percentage held by insiders helps to align the incentives of the management with those of the regular shareholders. Back to this chart, as we did over the last several weeks with the rest of our Q2 2024 videos, we're going to stick to the same scenarios, with the conservative scenario plugging in the gold price of $2,000 per ounce, balanced scenario plugging in the gold price of $2,300 per ounce, and optimistic scenario plugging in the gold price of $2,600 per ounce. Notice that the current gold price has already spiked above 2,600. But we're going to keep the numbers same as in the previous several videos to be a bit more consistent. And as usual, starting with the reserves and resources in the ground, here we try to look at the most updated numbers in accordance to any production that might have happened since the latest resource update, and according to most if not all royalties, especially in the case of Calibre Mining. So IAMgold has 7.5 million ounces of reserves, that's proven and probable reserves of gold, and additional 10.5 million ounces of measured and indicated resources of gold. New Gold has 3.2 million ounces of gold in reserves and additional 2.2 million ounces of gold in resources. That's M&I resources. Beyond that, all of these miners would have inferred resources, but those are not included in our valuation models. New Gold also has 8.2 million ounces of silver reserves with an additional 7.3 million ounces of silver resources. And New Gold has 551 million pounds of the reserves of copper with additional over 1.1 billion pounds in resources of copper. For Calibre Mining, they have 3.9 million ounces in reserves of gold and 4.5 million ounces in resources of gold. For silver, they have 4.5 million ounces in reserves with additional 1.2 million ounces in M&I resources of silver. Moving on to costs of producing all of that, extracting all of that out of the ground. And on this slide, we also look at the long-term debts, taxes, and cash in the bank. IAMgold has the highest leverage to gold price with the highest all-in sustaining costs at $1,763 per ounce. All of these numbers here are from the midpoint of the guidance for 2024, and a high all-in sustaining costs translates to high leverage versus gold price, because if gold price moves either up or down with high all-in sustaining costs, the margins are affected significantly, translating into a significant change of market share price, hence high leverage to gold price. IAMgold has $948 million in long-term debts and over $500 million in cash. Cash per se doesn't go into the valuation model, but I present it here as yet another risk measurement. For taxes, I just assume a 25% flat tax to simplify my process a little bit. Moving on to New Gold, They have the most attractive all-in sustaining costs, all the way down at $1,290 per ounce. Their long-term debts are nearly $500 million, and they have over $184 million in cash. Calibre Mining has all-in sustaining costs at $1,325. Long-term debts are over $337 million, and they have over $127 million in cash. Before we continue, let me remind you that at myfinanceteacher.org there is much more detail on a range of junior developers that will give your portfolio an explosive torque once the producers, developers, and finally the explorers catch up with the improvement in the sentiment that's actually taking place in the commodity, in the gold itself. So if you like this video, for much more details, make sure to join us at myfinanceteacher.org. Moving on to shares and time value of money, IAMgold has over 570 million in shares outstanding and only 0.09% in insider hands. At current annual production, proven and probable reserves will last for 11 years, adding only half of M&I resources, as those aren't very certain, would extend the average mine life to 19 years. New Gold has over 790 million shares outstanding, with a very nice 4.92%, nearly 5% in insider hands. At current annual production, reserves will last for 8 years, adding half of M&I resources extends that average mine life to 10 years. Moving on to Calibre, they have nearly 790 million shares outstanding as well, with an even larger percentage in insider hands. I do like that. Insiders are holding 6.32%. The insider numbers are according to Yahoo Finance. At current production, reserves will last for 14 years. Adding half of M&I resources extends that to 22 years. Discounting over these years of production, we're going to use a discount rate of 7%. Finally, with all of those numbers gathered up into our model, let's start with a conservative valuation where we plug in the gold price of $2,000, and in this scenario we plug in only the proven and probable reserves in the ground, without any of the M&I, never mind any of the inferred resources. Looking at the discounted per share value after all-in sustaining costs, long-term debts and taxes, that gives us 73 cents for IAMgold. New Gold's conservative valuation is at $1.89, and the conservative valuation for Calibre Mining is at $1.44. We could look at these numbers as yet another risk measurement showing us what might happen to share prices if gold price simply drops out of bed here. Moving on to the balance scenario, we plug in the gold price of $2,300, and even in our balance scenario we're still looking at proven and probable reserves in the ground. In that case, our valuation for IAMgold is at $2.74, New Gold is at $2.84, and Calibre Mining is at $2.17. Remember that leverage to gold price for IAMgold that I mentioned recently? That's why IAMgold catches up quite quickly with the other two as gold price increases from $2,000 to $2,300. You see that in the conservative scenario, the valuation for IAMgold is well under $1, while in the balanced scenario, increasing the gold price just a little bit allows the IAMgold to catch up again with the other two, with being a little bit under $3. Most excitingly, looking at the optimistic scenario, we plug in the gold price of $2,600, and in this scenario we are plugging in the proven and probable reserves in the ground, as well as only half of M&I resources, never mind any of the inferred resources or any further exploration success. In that case, the discounted per share value after costs, debts and taxes is over $7 for IAMgold, over $5.30 for New Gold, and over $4 for Calibre Mining. Wouldn't these numbers be exciting? In fact, as our optimistic price scenario is below current price, I think there is a pretty good chance of observing even higher prices once the sentiment spreads out of the commodity itself and into the miners, especially some of these smaller mid-tier miners. But before that happens, let me give you some additional food for thought for each of these three producers. Starting with IAMgold, Within 2024, they have updated their 2024 guidance, reducing the all-in sustaining costs significantly. Looking at the midpoint of the guidance, we see an over $100 reduction in the all-in sustaining costs. That in itself is already a very positive sign. Beyond that, year to date, within the first couple of quarters of 2024, the all-in sustaining costs were even lower than the lowest range of the updated guidance. So unless the costs balloon into the end of the year, this might help with a bit of a re-rate into early 2025. Beyond that, just this year in 2024, they have a new startup in production at one of their mines, co-owned with Sumitomo, by the way, a very large producer. And notice that this mine has very low all-in sustaining costs. So as the production ramps up, I expect into 2025, again, that might provide a very nice basis for a bit of a re-rate into that 2025. Moving on to new gold, we also have some very juicy expectations here into the end of 2026, early 2027. That's into the next 2 to 3 years. The gold production is expected to grow by 35%. Their copper production, mostly into the end of this period of 2 to 3 years, is expected to grow by 60%. And as the production grows, dividing the ongoing costs by a larger number of ounces produced gives us lower all-in sustaining costs over the next 2 to 3 years. Impressively, the all-in sustaining costs into late 2026, perhaps into 2027, are expected to decrease by half. So as I mentioned, very juicy expectations. And moving on to Calibre Mining, their most recent feasibility study for Valentine Mine shows that they expect production to start next year in 2025. And notice this all-in sustaining costs at just around $1,000 per ounce, so at relatively low all-in sustaining costs as well. Hence, if everything goes to plan and if the sentiment improves, allowing the miners to catch up with the commodity itself, with the gold itself, I do expect that this startup will also help with Calibre's re-rate perhaps noticeably higher. So there's some food for thought for you. Have a wonderful weekend. Bye bye.